Hi everybody, this is Isaac with another TechHub.training video going over the balance sheet Alteryx activity for the monthly challenge. You can see here I have my Alteryx workflow already built, and I'm just going to take it node by node, piece by piece, and sort of explain the logic of how I got to the solution. Remember, with Alteryx, it could look a little bit different because there's lots of ways to handle the data, and you may have found a different way that I didn't. So sound off in the comments if you found it a little bit different. Um, Here you can see the data. This is the general journal tab that shows the debits, the credits, the account, some auxiliary information, some of the date information, and the journal entry ID. You can see the other tabs are the beginning balances and the ending balance. And I'll just go ahead and close that so it doesn't interrupt the workflow. A little tip for you as well, if you're working with a big data sample and you don't want to have to wait every single time for it to run, take a lot of time, you can right click and you can I'm going to clear the cache just to show you, but you can right click and cache and run workflow, and that way it will open that workflow right there and it'll save it so you don't have to run it every time, and it'll connect it a little bit quicker. So you can see here I read in the general journal information, and then I use a summarize tool to summarize by each account how it changed from a debit and a credit sense. And you can see here I renamed some of the columns just for easier referencing. I renamed them to DR and CR for debit and credit. And then I sorted by account because you can see here it changed the ordering a little bit based on one of the columns, and I didn't really like that. And you can see I do that quite a few times in my workflow, but I reordered it based on the account just to make it flow a little bit better. So in the debits and credits, there's both balance sheet and income statement accounts. So I filter based on that right here. You can see the logic that I used is the account number greater than 4,000 would mean it's a balance sheet account, either a revenue or an expense account. So I created two different flows for that. Coming up to the income statement portion, I filter out the income statement expenses that I already filtered, and I filtered for the expenses and the revenues, and any account greater than 6,000 would show up as the expense, and anything less than would be the revenue. And I summed the debits and credits and calculated a total expenses or total revenue line here for each of those numbers. And then I just appended the fields to connect them, and then disselected some of them. So you just have that total expenses line and that total credits line, and calculated a retained earnings amount, meaning what amount would be debited into the stockholders' equity account later down the line. I input just a single line for that account 3,700, which is the owner's equity account that you would see here in the beginning balances, right here on the bottom for owner's equity, and appended that so that it looked like the account, DR balance, changed the field order, which you could also do in this tool, but I figured I would just highlight it right there, and then joined it to the rest of the balance sheet later. Coming back, you can see the filter out the null accounts, as you can see here. Because the data read in a little bit funny, I just filtered out that first null row with the accounts. And I input a 0 in for any of the debit or credit fields where it was null. You can see replaced with 0 for all of the nulls there. 1, 2, just nulls right there. On the outflow, you can see that is replaced with a 0. And then I calculated the total balance sheet journal entry changes for everything, creating a negative credit balance for those credit numbers because it's debit normalized, as you can see in the data. And then I added those debit and credits and created a new balance account, the DR balance, which shows right there. As you look at the fields, I selected the fields that were needed, filtered out that debit and credit line and just that DR balance to filter up and to join up on the owner's equity accounts. I renamed the DR balance field here from DR balance to DR changes. A little bit redundant, but based on the workflow that I was working on, that's just sort of how it ended up, as you can see here. I read in the beginning balances. Again, I filtered out some of those null accounts because it connected some of those weirdly. As you can see, I think it's at the bottom here. Yeah, I filtered out those nulls, and you can see true. fixed that, classified each account as either a debit or as either an asset, a liability, or an owner's equity account with this formula here. If the account is greater than 3,000, as in the number, it's an asset. Between 3,000 and 36.99, it's a liability, else it's owner's equity. You can see I changed the field to int32 because up here the account is int32, but when it comes in here, it comes in as a double. So I needed to change that to facilitate the joining. And as you can see here, the join acted just a little bit interesting. There's nothing that's just on the left side. There's quite a few that are in both of the data sets, not just the changes and not just the balances, but there are quite a few balances that didn't change from the beginning balances. So I added a DR balance field for those journal entries with no, or those accounts with no journal entries, and just input a 0 in for that, and then added those back and sorted by account just to make sure that there was no data lost as we went through the workflow. Calculated an ending balance based on the DR changes account. Here it takes that initial debit balance, adds the DR changes, and joins the ending balances right there for the given account, filters out those F4, 5, and 6 that came through based on the data. See here, there was no data lost. It was all the same. Well, there was some loss, but it was all just nulls. Nothing just on the left, all on the joined. Again, sort of by account just to make it pretty to look at. And this is where it diverts a little bit. So the main task that was given was to find out which accounts were different, just to test and to be sure where you needed to test the controls for the scenario given. So you can see here, it filtered out ending debit balances calculated were different than ending balances given. So the true line, it only shows just those two accounts, selects only the necessary columns, and in that browse tool, you see just the two accounts for 2300 and then 2420. So it seems like there's some discrepancy in the data and what's being allocated to the parts inventory and the hydraulic pumps inventory, so they're going to need to go test those changes. And just to be sure that the accounting equation holds, I've summed here all of the debits and credits based on that account type. Owner's equity creates a sum row, which if everything balances should equal 0 because all the credit balances are negative and all the debit balances are positive. Appended a total column there just to make it look nice and pretty with that text input tool. Join the two on top. As you can see there's all of the assets, all of the owner's equity, all of the liability accounts, and it ends up equaling 0. And just like I mentioned at the beginning of the video, your solution may look just slightly different based on how your workflow sort of shook out. And that's one of the beauties of Alteryx, is everything can look a little bit different, and everybody can calculate it just a little bit differently. As long as the answers are the same, it's not a big deal. Thanks again for tuning in, and hope you enjoyed the challenge.